These are the 4 advanced tax strategies that I am using as a self-made multimillionaire to pay $0 in income tax. Hey guys, Spencer Van here, and welcome back to the channel. If you're new here, my name is Spencer Van. And in today's video, I'm going to be breaking down the 4 advanced tax strategies that I am using to pay $0 in income tax. I'm actually using to get money back from the last 2 years. Now, make sure you stay to the end because the 4th one is really the key here. That's how I'm going to be getting money back from the IRS. They're going to be sending me a check for my last 2 years of taxes for the tune of hundreds of thousands of dollars. Because of this legal tax loophole. So make sure you stay to the end, and with that being said, let's jump into the first tax loophole. Starting with the first one, a lot of you guys that are business owners or salespeople that are 1099 and get paid through your company, you guys have probably heard of the accelerated depreciation on cars. That's a pretty common one. If you don't know that one, if you have an SUV that's over 6,000 pounds and you buy it for 100% business use, you can write off the entire purchase price in the year that you buy it. In some cases. Now, obviously, again, talk to your tax accountant, blah, blah, blah. Everyone knows that one. It's a pretty basic one. What you didn't know is that you can kind of do the same thing with real estate, which is much better, because the problem with buying a car is you're buying a depreciating asset that doesn't make any money, it just loses you money every year. And, if you make $1 million, $2 million, $3 million, you can only write off up to $1 million with that. So it really won't help you that much either. And then what are you going to buy? Like $100,000 cars? How many cars do you need, right? So that kind of sucks. And then I was trying to figure out ways, like, how can I make money with this loophole? And it was like, okay, well, I can start like a Turo rental car business, but then I got to manage these rental cars. I got to clean them, and I got to hire someone, but then I'm like, it's not really that profitable, so then I'm losing money on that. So it just didn't make any sense. But then when I realized that you can do something similar with real estate, with commercial real estate, you can run what's called a cost segregation analysis. And basically what you do is you buy a piece of commercial real estate. There's something called straight line depreciation, which is how most things are depreciated, which is the IRS sets an amount of time that you can divide the purchase price out of and depreciate it from. And that's what most people do with real estate. For commercial real estate, it's 35 years. So that means if you bought it for $1 million, you divide by 35, and whatever that number is, 20-something thousand. You can write that off every single year in your taxes. But you can accelerate the depreciation with a cost segregation analysis. So you can go on, you do a report. They basically inspect every piece of the property, and they figure out the timelines for each actual piece of the property to depreciate. So for example, the roof tiles, maybe it's 2 years instead of 35. Well, then you can accelerate the depreciation on that part of the building to 2 years. And if you're buying a $10 million building, you can save a lot of money in taxes by doing that. So that's one of the biggest things. I'm going to be doing that a lot next year. Unfortunately, it's already December 13th, and I'm not going to have time to buy a real estate commercial building this year to do that. But it is a big loophole that if you are making decent money, you might want to consider, because buying a bunch of cars is kind of silly. So that's tax loophole number 1. Tax loophole number 2 is, I think I have 4. So 4 tax loopholes. Number 2 is R&D tax credits. So research and development tax credits. A lot of companies, like my own company, we do research and development. And there are certain activities that qualify as research and development in the IRS. And you can actually, if they qualify, receive a tax credit. Not a deduction, but a tax credit, meaning you can just subtract it directly from your tax bill. Some of the things that qualify, well, the most notable one for me is software development. So if you have developed the software at all, even if it's just like a little plug-in or something, I've spent, $100,000 developing a software this year, and I can just take that all out of my taxes. Again, talk to your tax accountant, blah, 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 but look into research and development tax credits. There's a lot of different uses for them outside of software. I don't remember all of them because they didn't really apply to me, but it's a really powerful tool. The third one that is probably a little bit more well-known, but still widely really not that well-known, is the COVID tax credit. So if you had COVID this year, for any day that you were out of work and couldn't work because you were sick, you can receive, I think it's $520-something a day as a tax credit up to a certain amount. Not only can you take that for yourself, but then anybody that you had to take care of, so let's say you had a parent or you had a child that you had to take care of during that time, you can't write off the full 500, or excuse me, you can't take a credit for the full 500, but you can take a credit for, I believe it's 180 or something like that. So that's also a really awesome one as well. But so far, before I get to the big one, because the big one's at the end, okay? Accelerated depreciation on real estate through a cost segregation analysis. We've got R&D tax credits. We've got the COVID tax credit. And the 4th one, and the moment you've all been waiting for, drum roll please, is solar tax credits. So there's companies out there, and I'm affiliated with one of them. I can't pitch them to, it's not my company. When I say I'm affiliated, I mean I use these guys for this. They own every part of the solar process. So everything from placing the solar panels to installing them to all of that, to selling them, all of that. But the only thing they don't do is they don't manufacture the solar panels. And basically what you can do is if you make a certain amount of money, you can partner with these people. They will give you all of their solar tax credits for your income. So you make $1 million, you pay, say you pay $300,000 in taxes or $400,000 in taxes. They give you $400,000 worth of tax credits. You pay 0 taxes to the IRS. You use the tax credits to pay $0 in taxes, and then you pay the solar company 90% of what you would have paid. Okay, and they take that 90% and they go and they buy more solar panels. And so it's a flat 10% savings. Now what's really cool is they can actually go back up to 2 years and get you the money back that you paid. Now this guy is like in the way, on the freeway. So for example, for my, as we're recording this is 2021, I can go back 2019 to 2020 and file an amendment in my taxes and basically get back all the money that I paid in taxes. And I still got to give the solar company 90%, but I'll be frank with you, I'd rather go pay a private company to pull up solar panels because I know that they're going to do a great job of that than give to the government. I have no idea where that money's going. So that's pretty much that. Hopefully this has been helpful. These are kind of for the more advanced unknown tax strategies. By no means, I'm not a tax strategist. I'm just a 23-year-old that makes a little bit of money and owns a company, and I don't know anything. So don't listen to me. I'm driving a Ford, okay? I'm not, I got a nice watch, I got a nice jacket, but I'm driving a Ford, okay? Keep that in mind. That's pretty much it. So hopefully this video was helpful. If you liked it, click the like button down below, comment if you know any cool tax loopholes, and subscribe for more awesome business videos.